What's up everyone, this is Kenny here from Property Stories. So today in this video, I want to discuss specifically about valuation when it comes to under construction properties, the projects out there that you see, and the relationship with the banks. Because I see some people, right, the questions are like this area 500 per square feet, how come the bank can actually finance when the developer is selling at 1000 per square feet, example. Or sometimes say they ask, how come this project, the agent will tell them, how come this project can only get 80%? Yeah, the agents will just say bank policy. Yes, correct, it's bank policy. Okay, bank is the one that decide how much percentage they want to finance, right? But why? Why is it bank policy and how is it determined? This is what we are going to discuss today. Okay, so let's start. Before the project is financed, you have a piece of land, right? So this financing is called a bridging loan. Okay, bridging loan is done by commercial bank. The same property, the same piece of land I have here, I take bridging loan, right, to build. So when I build, I need to get loans from my buyers. You know, people can't buy ma. People buy cash crazy me. Okay, so this, then I will need the banks to finance this. For the banks to finance this piece of property that I'm doing, is called an end financing. Okay, EF. In the property terms and banker term, we call it EF, end financing. But if you, as a purchaser today, you go in, just one question you need to ask: is this bank panel or not? When the agent tell you, oh, okay, oh sir, miss, this bank is the panel of this project, done. That means you know got EF. That means you know you can apply and get loan from the bank for this project. Okay, for this project I'm building, I'm the developer now. So now, to send for end financing, the banks will definitely request from me all the documents, including a valuation report. Yes, it's compulsory. All properties, it doesn't matter whether it's under construction or completed, it's compulsory to have a valuation report before the bank can finance it. This is not by the bank, this is by the central bank. So you know that this is non-negotiable. So I will prepare the valuation report. Okay, I prepare the valuation report, I send to the banks. Most of the time, right, the developer will just say, nah, bank, you go and do your valuation report lah. Okay, you do your valuation report and then you let me know what's the result. So in Malaysia, we have many banks. Okay, let's just say I say all the banks I try lah, because when purchaser come in, I can tell the purchaser what bank you want. I got all the banks, right? It looks good and it is also easier for the purchaser and it elevates my name. You see, I got how many bank panel? That's why big developers, the bigger the developer, most of the time you see there's all the banks. The banks that most people don't really use also, they have the panel. Okay, because of this, it makes them look good also. Because if the bank can finance a property, means the bank has done its due diligence on the company, on the company records, everything, on the financial, the cash flow, everything the bank has done on the land. So basically the bank has done like 50% of the homework for you. Okay, so back to my situation. Now I'm the developer, so I just did the valuation report. But if I do the valuation report, I need to justify my price. Now I'm selling at 1000 per square feet, then what the area surrounding is 500 per square feet, so I need to justify my price, right? I find the valuers, and give them, say I still have to pay. Is the valuation report is not called valuation report, it's called valuation report is used for completed properties. But if it's project, right, it's called the project assessment report, or some people refer to it as opinion paper. So it costs about few thousand also, can be up to 5,000. Just one opinion paper can cost up to 5,000. The valuer can charge you that. So I will ask the valuer, so many valuers, right? Can you value this at 1,000 per square feet? I'll ask. So which valuer can value at 1,000 per square feet? Maybe out of 10, 1 or 2 valuers can give me. So 2, okay lah, I just pay lah. I get 1,000 per square feet, I submit to all the 10 banks, see which one give me the EF. Because sometimes, right, it's not the end financing can be get rejected sometimes because maybe I'm new, it's my first project, I have no track record, then get rejected. It's the same like applying for a housing loan, so it's rejected. But maybe my project, the location is non-target for them, that bank, so they reject my end financing. It's possible. Or they want to do also the end financing, but they don't agree with my valuation report. Remember, these valuation reports I prepare one. I can say and do whatever I want. So they also can get a second opinion, right? They have their own panel, I have my own panel. So on that point of time, right, they will actually evaluate themselves. Then suddenly they say, hey, Kenny, I cannot finance your project. You see, this place is 500 per square feet. Then you want to sell at 1,000 per square feet. Let me tell you what, we still want to finance your project. Your location is okay, but we cannot finance it at 1,000 per square feet. So what I'm going to do is I'm going to give you 800 per square feet. Instead of 500, I give you 800 per square feet. So when your customer comes, we'll cut, okay? Instead of 90%, we'll give the customer 80% for end financing. But your end financing is approved, okay? So here are the terms and conditions. They will come out at LU, letter of undertaking, from developer to bank to developer, and then there's one more letter of undertaking from developer to bank. Though these are legal things, so they need to agree. I as a developer, I need to sign and agree to the terms, then I can get the end financing line. If not, don't have, okay? So what's the moral of the story here? The moral of the story here is that I can sell whatever price I want as long as the valuer agree. I can get the valuation, I can sell whatever price I want, okay? So why is it there's a difference between one valuer to another valuer? Valuation, like I mentioned many times in this channel, is not a math. A math meaning 1 plus 1 equals 2. You go anywhere in the world, 1 plus 1 equals to 2. No such thing as 1 plus 1 equals to 3. That is the wrong answer, okay? So valuation is not like that. Valuation is a combination of art and science. So if being art and science, the art part is the one that different people have different views on the property, on the things that you value, okay? That's why they put a different price. Some valuers may agree 1,000 is fair price. Some people will say 1,000 is 50% overpriced. Some people will say 1,000, okay lah, I think it's about 10% overpriced above that area. Yeah, but they can justify, okay? So they can justify based on what I've shared with them, my plans, everything. They can justify. Okay, some will agree, some will not agree with my price. So when you see a development, right, sometimes why the bank can finance at that price is because they can get, the valuers can give that price, okay? At the end of the day, right, it's really up to you as a purchaser to decide whether it's worth that price or not for yourself. So again, this discrepancy, right, you can see even when you talk about food. I do a lot of food reviews in my other YouTube channel, and then sometimes, right, when I go to the place, I get comments like, yeah, this place, bro, the food cannot, not nice. But another comment will say, hey, this place very good. I like the food here. They come here. I come here since I was young, and I like the food here. So you see the difference, all right? There's no hard and fast rule when it comes to valuation. So what does this mean to you as a purchaser? If the bank can value it at a future value, the valuer can value it at future value, the bank will take it as end financing. This is where you see some projects, right? You get a lot of rebates. You get a lot of cash back. Because of this, if they were to price it at the current value, add extra future value, maybe 10%, but 10% still okay lah. You cover your down payment. But if they say future value can be 50% higher, once complete 50% higher, and they can justify it, then the bank will finance it. You got cash back. You don't need to come out. You buy property, you get money. That's the implication to you, number one. Number two, which is the main reason the banks are doing this, and the industry practice is this, is because most people do not have the money to pay for a 10% down payment. Okay, imagine today you want to buy a 500,000 property. If it's a sub sales, you have to pay 10%, which is 50,000. Most people don't have. So that's why sub sales, you can also see things like markup loan. Third, you know that from this phenomenon, right, these things will keep, when it happens, it will set a benchmark, and it will cause the property price. One of the reasons the property price keep on increasing is because of this as well, because they keep pricing it higher and higher. So when they keep pricing it higher and higher, but the fundamental is not there, what it means by fundamental here, the property price get higher, but our salary is not, our productivity is not. Okay, this is not from me. This you can check in Department of Statistics. Our median income, the last I checked, I think was about 2,000 plus only. This is from Department of Statistics. Our median income for Malaysians. Property prices will keep on increasing. Because of one of the factors is this. But if they keep on increasing, at one point, right, what you will find is that since our income can't keep up, right, we just don't buy. Or we can find another deal that suits our income. All right. So this video, right, is not meant to talk bad about anybody, to bash anybody, Please do not take it the wrong way. I'm just trying to share with you that we all have to do what we need to do. Okay, you can't blame the developer for building at that price. You have a choice. Nobody is pointing a gun at your head to buy that property. They put their marketing package, they put their rebates, they put very high rebates, and then you are the one that may be attracted to it because for whatever reasons only you know. And sometimes I understand that it may be the only reason because you want some cash. I'm not here to judge. Okay, I'm here to share with you what is going on and how I think about it, and perhaps my perspective, right? I want you to sit down and think for yourself. Okay, don't ever blame anybody, the developer, the bank, or some people will tell me, oh yeah, the bank want to earn more lah, because they disburse more, they get more ma. Yeah, it's true, but first things first, did anyone actually force you to buy? No. Okay, did anyone force you to buy? No. It's all entirely up to you, your decision. You can't change the things overnight, and please don't expect things to change overnight. Government not doing this lah, government not doing that lah. Blame everybody except yourself. Okay? I want you to, at the end of the day, understand where this thing is going, how it happens in terms of valuation part, and the most of all, right, what I want you to know is that the power is in your hand. You choose. You choose your own whether you want to buy or not. Okay? This is Kenny here from Property Stories, and I'll see you again next video.